Hello and welcome back to the Note. We saw renewed heavy selling across the rest of the world today, but then we've had a very interesting bounce here in Wall Street. The only question is whether it's a durable bounce or just a dead cat one. Now, you can see what happened clearly enough from Apple's share price here. After falling at the open, there was a distinct revival in mid-morning, and that was basically sustained throughout the rest of the day. Now, it's fairly clear where the bounce came from. Oil at least managed to avoid further falls today, and so you saw a very dramatic rebound in the energy sector. Very much the leader of the S&P sectors. If we take a look at this next chart, you can see that that doesn't necessarily mean all that much because, of course, energy had been savagely sold down. It was not difficult for it to stage a rebound, but it's still plainly a positive sign, and you have to add that a number of the other sectors that have suffered worst selling recently, including emerging market currencies and industrial metals, also at least saw some kind of strength today. If you want a more negative sign, we did have two big US companies report earnings. JP Morgan announced before the market opened. They had earnings that were ahead of expectation, although they also had rather a downbeat forecast for the economy, and their share price was up but less than the market. Intel announced after the market. Both earnings and revenue were ahead of official street expectations, and their share price was down quite significantly in after-hours trading. So it does look as though traders remain very suspicious. It's still too early to say that this was anything more than a dead cat bounce.